We want to continue our discussion of the balance sheet for Tiffany and Flower Foods by looking at liabilities. Liabilities are what the firm owes to other people. Okay, our basic accounting equation. Assets are what the firm owns, and where they got the money to get the assets is the right-hand side. It's either liabilities, money they owe to other people, or equity. That's the residual value. All right, so another way of looking at that, if you take assets minus liabilities, what's left over is the equity, or the residual value. Okay, like the assets, we split liabilities into two portions, the current portion and the non-current portion, okay? Generally speaking, the current portion is things that'll come due within the next year. The non-current portion is things that last their obligations that stretch out over multiple years. Within the current portion, there is the current portion of long-term debt. Long-term debt is generally long-term borrowed money, but like your parents might have a 30-year mortgage on their house. When they take it out, that 30-year mortgage, it has 30 years worth of payments. 29 of them will be considered long-term debt. The upcoming year's payments would be considered the current portion of debt. Now, there's other short-term debt arrangements like notes payable and short-term bank loans that would fit into the current portion of debt. And we pay attention to that because you want to know what's got to be paid in the upcoming year, because that can be fairly important. You need to have enough money coming in to pay off the obligations that have to go out. Another current liability is accounts payable, and this is usually a major category. Accounts payable, generally speaking, is the money we owe to our suppliers for inventory purchases on account. Now, it's not just inventory, but that's at your stage of the game. Try and keep it simple. Think of it as that's the company purchasing inventory and not having to pay cash for it. They get a bill and they have 30 days or 60 days to pay the bill. There are other accruals. That's other things that the firm owes. For instance, they don't have to pay income taxes every day. They pay income taxes every 90 days. But they keep track of how much they owe. And there are employee salaries. Employees don't get paid every day. They get paid maybe every 2 weeks. They get paid once a month. The company keeps track of how much they owe their employees as of any given day so that they know what their obligations are. Other current liabilities can be darn near anything. If you want to know what is actually in there, dig through the 10K. They will explain in words that the average person is supposed to be able to read what the content of the other categories actually is. But you might want to wait till you've had a few more classes before you start digging that deep into a 10K. The long-term debt, long-term lease obligations, and other non-current liabilities. Other non-current liabilities can be things like long-term obligations, long-term contractual obligations. They can also be pension plans that you owe to your employees. A lot of things that can go in there. One thing you might want to notice is that the long-term lease obligations went from 31 million to over $1 billion here with Tiffany, and from 16 million to 343 million for Flower. There was an accounting change, and that's where companies started reporting long-term lease obligations some of which they didn't used to have to report. So you also see an increase in the assets, because if we go up here and look at lease right of use assets, they were zero, they weren't reported at all, and now they're about $1 billion, which is roughly the same amount as the lease obligation. without having to understand where that comes from because accountants calculate those numbers. You have to be aware sometimes of major changes in GAAP accounting because all companies have started reporting this. And so it looks like everybody had a big jump in assets and had a big jump in liabilities. And all it is, they just started disclosing stuff they didn't used to have to disclose. All right, so that's basically the liabilities, what you owe to other people.